So I think the next speaker is Jonah. I'm really excited to hear him talk about Upstart. You know, me working in the financial industry when it comes to banking, I do a lot of commercial underwriting for the credit unions around the United States. So Jonah, floor is yours.
Yep. Okay, cool. Yeah, before I talk about Upstart, I just want to add a couple more things to Futu. So I actually had a call with the marketing team from Futu on Friday, the US team, and they're definitely trying to grow more in the US to take on Robinhood and Webull. They look at Robinhood and Webull as their two biggest competitors in the US. If anyone noticed, they actually so Futu Bull is the Asian app, and then Moomoo is the US app. And Moomoo was actually one of the sponsors for the Berkshire Hathaway annual conference yesterday. So if you saw any of the flyers that went out on social media, you'll see the Moomoo logo was right there in the bottom left-hand corner. The other thing I'll note before I jump into to Upstart is Tencent, which I think everyone probably knows Tencent as the this giant technology slash internet conglomerate from Asia. Tencent was a very, very early investor in Futu, and they are currently the second largest shareholder after the founder of Futu. So, back to the credibility of the numbers, I think when you have Tencent as the largest outside shareholder, as well as some of the VC firms that are still in there, like Matrix and General Atlantic and Sequoia, I think you can be pretty comfortable that the numbers are legit and credible. So Futu remains one of my biggest positions. I think this could be a $250 stock by the end of this year. So we'll see. I mean,
Can
because
I
one
can I
last thing. I
follow
mean,
up with
when
you
you
really
can,
quick? Sorry. Oh,
yeah.
sorry. I'm curious. So, how when did they come to the U.S. and do you know anything about their U.S. business? I'm just curious since you had the conversation.
Yeah, I don't know exactly when they came to the U.S. I mean, I tried to probe her for some details on how, like, what percentage of their users are U.S., and she wouldn't give me a hard number, but it sounds like it's probably less than 5% overall. That's where the bigger money is because that's where there's actually less competition. But now how much money they're willing to spend to grow in the
Thanks.
U.S., I have no idea.
Thank you.
Okay, so I'll talk about Upstart now. So Uh, Upstart is still one of my biggest positions. I think it is number one right now. I'm not going to give the exact percentage, but it's a pretty meaningful position. It's been in my top three basically all year. So I've been bullish on Upstart since December when I did my Substack write up on the company right after their IPO. I'm mad at myself for not knowing more about this company when they did the IPO. I believe they came public around the same time as DoorDash and Airbnb. So they kind of got lost in the shuffle there. So, it was a decent IPO, but it wasn't one of these like really hot, retail, foaming at the mouth IPOs like Airbnb and DoorDash obviously were. So, I think the company came public around 20 or low 20s, and then it popped up into the mid to high 20s within a couple days. I jumped into Upstart probably around 35 or 36, did my write up around 40, and as we know now, I think the stock's about 109 as of Friday's close. So they've had a pretty wild year. Coming into this year, the expectations on revenues were for around $360 million, but when they reported their Q4 numbers, they raised that guidance for 2021 to 500 million, which is obviously a monster raise. Now, I don't think they had given the 360 million unless that was maybe in the S1. I'd have to go back and check, but either way, going from 360 to 500 changes the story. Obviously, the stock got re-rated, and we saw the stock jump from 56 up all the way to 165 within a few days, and then it pulled all the way back down to like 92 or 93, and then now it started to move back higher, like I said, about 109. So I call Upstart they're not really a lender. They are enabling other lenders to use a digital first AI approach to underwriting. So Upstart was started about 8 years ago, 9 years ago by Anna and David. Dave Gerard, both from Google. And then Paul, the third founder, was a Thiel Fellowship member. If anyone knows, Peter Thiel put this program together where he would, I think, essentially pay people to drop out of high school or not go to college and join his Thiel Fellowship and try to start a company. Thankfully, Paul got partnered up with or found Dave and Anna because they've been working on this AI model for 8 or 9 years, which is part of their moat or competitive advantage. So they have a massive head start on any other company that wanted to try to build an AI powered platform like this, because that 8 years of head start means that they have billions and billions of data points to use that have enabled this AI model to become smarter and smarter over time, which is exactly what AI and machine learning are all about. So the traditional underwriting model uses, or platforms use, FICO scores, which are extremely archaic. They were created 30 years ago. They really haven't changed at all. And what Upstart created was this AI model that uses 1,600 data points or variables on an individual to determine their credit worthiness, whether or not they should get the loan. And over the last 8 years, they've powered over 700,000 loans, with, millions and millions of repayments or missed payments. And those all become data points and variables that help the AI get smarter and smarter. So you add it all up, and Upstart says there's now over 15 billion cells of data that have enabled this AI model to become better and better over time. So there's different ways that, so about 98% of the money that Upstart makes is through fees, by enabling these bank partners to use their model. And these customers or the borrowers either come into Upstart, or either, I guess they get their loans either by coming to upstart.com and applying, and then Upstart will provide offers from their bank partners, and then obviously the potential borrower can pick which offer or which rate they want. Or a potential borrower would go to one of their bank partners' websites and apply for a loan, and they're essentially, that loan or that underwriting process is essentially getting powered by Upstart, but the borrower has no idea, because Upstart's obviously created a digital first interface, so that the borrower just assumes that everything is running through the underwriting platform of the bank, not knowing that that platform is being powered by Upstart. So the borrower doesn't care, because by using this AI model, I believe it's the average borrower gets about a 16% cheaper interest rate. And they get more offers because of all these bank partners if they're coming to upstart.com. But the more powerful number is, banks are able to issue 175% more loans by using Upstart without increasing their default rate, which is obviously where the risk lies in doing lending to begin with. Banks right now in the U.S. they have the strongest balance sheets in history. I don't know if people realize that. The amount of cash that's sitting on these bank balance sheets is just astronomical. A lot of this was obviously money that came in from the Fed and the Treasury that people didn't get to spend last year because they weren't leaving their homes. And there's just trillions of dollars sitting on bank balance sheets right now. And the only way banks really make money off of that money, off of those deposits, is by doing lending. So, over the next few years, we could see just a wild amount of lending and credit going out to consumers, in personal loans and auto loans and mortgages and everything else, just because of the strength of the personal balance sheets as well as the bank's balance sheets. So I think this is a really ideal time for Upstart to be, not just coming public, but expanding the number of bank partners they work with, and now they're expanding the types of credit they can work with their bank partners. So, they first started working on personal loans, so loans between, I think it was 1,000 and 50,000, and that's what they've been doing for the last 6 or 7 years. And as of last year, they're now getting into auto lending, which is a $650 billion market by itself. And then on the last earnings call, Dave announced that they acquired a company called Prodigy, which is a digital first auto software platform. So Dave kind of explains it as the like the Tesla version, I suppose. So when you go into a Tesla store, not really a dealership, more of a store, and they give you an iPad, and you can play around with it and customize your car and apply for loans and everything else. That's essentially what Prodigy wants to do for everybody else, for the rest of the car industry, all of these dealers. And I assume it's going to be online dealers as well. And then that's how Upstart can kind of plug in the lending portion and have kind of first crack at these people buying cars. So I think it was a really smart acquisition. It's going to help them kind of catapult into the auto lending faster now by not just selling software to these auto dealers, but also kind of, like I said, having first crack on the lending side of it. And I think they'll be able to accelerate their growth in bank partners by having this AI software that is available for both personal lending as well as auto lending. Because a lot of people, when they go get a car loan, they still walk into their local bank or call their local bank or go to their local bank's website or, Bank America, TD, whoever it is, and that's where they apply for an auto loan. Now, I mean, a lot of the banks that they're working with right now are kind of, I don't want to say no-name banks, but they're certainly not like your big national banks that we all know, Bank America, Citigroup, et cetera. I don't know if or when Upstart works with those companies because I don't know if those companies are trying to develop their own AI in-house or if they're willing to outsource it to a company like Upstart. So most of Upstart's current bank partners are, I call them like mid-size regional banks that typically have anywhere from 10 to $50 billion in assets and loans, which are great. They're obviously doing a lot of lending, so those are great partners for Upstart. But it'll be interesting to see if Upstart can get into those bigger national banks or the digital first banks, the Squares, the SoFis, et cetera. If Upstart can help power their lending, I mean, it just I mean, the upside is almost limitless for a company like Upstart just because of the size of the credit markets. I mean, just in the U.S., I mean, you're talking when you add up personal and auto, and if they get into mortgages and student loans and credit cards and small business loans, I mean, you're talking trillions of dollars a year in total addressable market. Now, obviously, their fees would only be a portion of that, but still, I mean, this is a company that I've been bullish on for the last 4 months. Like I said, I continue to be very, very bullish on what they're doing. If I could only own 3 or 4 stocks for the next 2 years, Upstart and Futu would absolutely be two of them, just because the fundamentals are so strong. Both companies are already profitable. I know that they both pulled back in that whole growth, the growth pullback in early March, where we saw the 10-year going up. So companies that weren't profitable were getting pounded. And that's why I doubled down on these two, because they're both profitable. I mean, they're both generating net income and free cash flow. And they both did recent secondary offerings to, fortify their balance sheet. I was a little shocked by both. I was a little more shocked by the Futu one, I suppose. But I guess if they're going to spend that money to increase margin for their customers, which will create more trading and options, then that's how they justify it. The Upstart one is a little more surprising, unless they're planning another acquisition, I suppose, because it's such an asset-light business model with really, really high gross margins. I'm not really sure why they would need a whole bunch of more cash in the balance sheet. But, when your stock goes up 3x in a couple months, I guess it's not a bad idea to take advantage of that and, build up the cash reserves.
Thanks, Jonah. Great job, man.
Thanks.
I do have a question for you real quick.
Yep.
You said obviously those two are your favorites. If you had to pick between the two, which one do you think long-term would you rather own?
I'd probably pick Upstart if I had to, just because it's not, non-Chinese, and that Chinese thing is always a risk and will probably always impact valuation at some point or create bigger sell-offs in the future, based on regulations or trade wars or, God knows what else. So I think from like a risk standpoint, Upstart is probably a little bit more favorable.
Yeah, I agree with you. Really quick, do you think that those huge players with deep pockets will be interested in acquiring this company at some point?
Oh man, I mean, it's hard for me to guess. I mean, to be honest, I don't know. I'm not so sure it would even make sense, right? I mean, because the benefit of Upstart, the value of Upstart is being sort of a neutral party and being able to sell their AI software or platform to all of the banks. So if one of the banks bought them, what sort of conflict does that create if they're then trying to sell that software to the other banks that they compete with? So I'm not sure. I mean, unless it was like a Visa or a MasterCard that is, more agnostic when it comes to, the big banks. I could see something like that would make all the sense in the world. I'm just not sure if a payment processor would want to get into the AI lending space.
Yeah, that's what I meant. Of course, like when we talk about like Bank of America or Wells Fargo or Chase, there definitely would be conflict of interest. But when it comes to like Visa, Mastercard, maybe even Square or PayPal at some
Yeah,
point,
or I mean, like a Google. I mean,
or Google.
someone like a Google. I mean, that would be, or PayPal. But I mean, like even PayPal sort of competes with the big banks in some ways. I mean, PayPal. Yeah, I mean, I would say Visa and Mastercard are probably like the most agnostic to the banks. PayPal and Square are definitely starting to creep into the banks' um, margin, or how they make money with lending and deposits and everything else. So yeah, I mean, I could see something like a Google, Visa, Mastercard. I mean, Upstart's only an $8 billion company right now. I mean, as much upside as I think this company has, it's still under $10 billion. I mean, it's still considered even a small mid cap stock. So, and I really don't even want them to get acquired. I mean, there's certain companies in your portfolio that you don't mind them getting acquired because you feel like you can put that cash into other ideas. Like, I really would not want Upstart to get acquired because I fully expect this to be one of my best positions for the next 3, 4, 5 years.
Along with ozone, I assume.
I do want to get. I forget if did I get back in Ozone? Yeah, I did get back in Ozone last week.
At least that's what you tweeted me about that you did. I think it was on
Yeah.
Friday.
Yep, I did. Yeah, I mean, I sold it a couple weeks ago. I think in the mid 60s. I forget the number. Hoping for a pullback, and it pulled back a little bit. I think it pulled back to the 20 or 50 day. I think it pulled back to the 20 day, and that's when I jumped in.
Thank you.
Yeah,
Good
thanks,
job,
John. I
man.
really appreciate it.